Welcome back to Squawk Box. Dozens of companies set to report next week, including financial giants JP Morgan, BlackRock, and Bank of America. Investors will also hear from PepsiCo, Netflix, United Airlines, and many more. Joining us now with more on the market, Stephanie Gill, Chief Investment Officer at Robinhood. Stephanie, great to see you. We were just discussing price targets, which for a lot of strategists have been very trying, difficult this year.
For the S&P.
Right, for the S&P. 6,200 is where you are currently, although you were higher at the beginning of the year, and now you see that old price target as a possibility for this year, 65.
Yeah, I started at 65 when tariffs hit. I said, GDP could come down and that could impact earnings. Usually 1% hit on GDP is about a 4% hit on earnings. We've seen earnings expectations come down. I said there was risk to 5,800, but I never went there. And now I think there's risk to 6,500. Obviously, we're over my target. So, with the pumping up of potential tariffs now, I'm just sort of waiting to see what happens.
You were never a panicking.
I was never panicking.
Yeah, because we got down to well below.
I just also think this was all driven by tariffs, but is driven by our president, who also I think cares about the economy and wants the economy to grow. So I just said I think this is the opening bid, and wasn't sure we would end there.
Right, 65 is good for me. I think you.
Right. You don't think 66 is better for you, or
66 would be better for me. Why you go 65 when you go 66? When Delta hit yesterday, I thought that was deep. Like deep thinkers would have to, because Delta, it was still well below where they started the year for their forecast, but it was so much better than they thought a month or two ago. The stock got, the whole market got ignited from Delta.
Yeah, I mean, if you're out there traveling, you can see the airports are not empty. The economy is still growing. People are still spending money. Booking Holdings, for example, is still making money. So I was surprised. I mean, I think Delta was just trying to reimagine their supply. I think that's one thing they have pulled back on. I've noticed it from flying myself. But when you are managing your business, you can show better rewards. And if you're Delta and you see all that stuff coming out and there's so much uncertainty, you're like many companies, you're probably going to move your expectations down a bit more than they maybe should be.
What will you listen for out of earnings season? Because you're going to get much sort of more real-time data than some of the economic data in terms of the reads in the consumer and business spending.
You're really excited about earnings this time around, aren't you, to see what's happening? I can tell.
I am, right?
I can tell.
It's a pivotal part, I think, because, price earnings ratios are, 21, 22 times. But I do think there's a lot of stuff in the hopper with the big, beautiful bill. I think it's really illuminated. We have fireflies all over the backyard now today. I think it's really brought fireflies to certain parts of the economy. I think for bank earnings, that's obviously coming up first. The comps for this quarter are kind of rough. I think some of them had really good quarters, year over year. But I still think we can look past that, because I do think the financial sector and the banking sector should really benefit.
Despite the valuations on the on the bigger banks.
Yeah, I mean, I'm more bullish on the regionals than the
trade at
than the large
half in terms of price to book.
Yeah, exactly. And I think they'll just benefit more from deregulation. And if we do get some rate cuts this year, which I think we should, but obviously there are reasons why they haven't been cut yet, then I think you do get a steeper curve, and then that does help also.
Is that the strategy within sectors? Because within sectors, even we're seeing a broadening in the markets in general. But even within sectors, you're seeing a rotation starting between the more expensive ones to the less expensive. You're seeing that in banks. You're seeing that in semiconductors.
Yeah. I mean, we run Robinhood Strategies, and we've pivoted to GARP, growth at the right price. So we still have tech in the portfolios, but we also like industrials, but specifically aerospace and defense and mid caps, because they actually are pretty cheap. Long-term average of mid caps is 19 times. It was 14.5. It's back to 16.
But not small, which are also catching a bit.
I'm not
recently.
Quite there yet. I feel like we just have to see what happens with short-term rates. They're more affected by, heightened short-term rates, because 30% of their debt tends to be floating rate. So I want to see what happens. Mid caps to me is the ignored middle child.
6,500. Does it matter what the Fed does this year?
Yeah, I mean, I think if they cut, then you definitely get 6,500.
If they cut anything.
If they cut anything, I think, because then it just reaffirms what the market has been hoping for. But I'm worried about the labor market. That's where I think the biggest risk is.